Interest rate supposed to be around 3 to 4%.
Right, but based on what? You know what I mean?
Based on inflation being 1 or 2.
Right, which
There's
it's
like a
not.
marginal benefit between the
Right,
two.
which it's not. It's not
Oh.
2.7%, right?
I understand what you're saying. It's higher. Yeah,
Yes,
it's higher. The
of course
real
it
the
is.
real inflation is higher. Yeah.
Yes, of course it is. And when you listen to guys like Tiff McClem and I watch them every time. I always watch because I like to hear, right? And I like to know what they're saying. And I gotta tell you, it doesn't make a whole lot of sense. Welcome to Supply and Demand with Adam Nadler. This is a podcast dedicated to the real estate market in Canada, available now on YouTube, Apple Music, and Spotify. The baseline level of anxiety in Toronto is so abnormally high, and you just get used to it. Yeah, constantly, just like, you know, and like everyone's wanting responses
Is
instantly,
this?
and like, right,
This is
it's
Toronto.
right. You're tapping, yeah, you're tapping your foot. It's like the incessant foot tapping, and like, I just feel like people here kind of live to work, where other places people work to live. You know what I mean?
When I was in Amsterdam, I swear to God, the entire time I was there, I would walk outside and I would be riding on a bike with Lara. And as I'm riding the bike, I can't get the song out of my head because it's so fitting for the atmosphere. I just start singing it. So I start going, "Baby, don't worry
Yeah.
about a thing," because that's how it feels. Every little thing is gonna be all right, right? What a weird place. Definitely some place I need to go again to. So freaking expensive, Jesus Christ.
It's kind of the perspective that you get when you go somewhere else where um, you know, that kind of like that movie The Bucket List.
I don't think I've ever seen it.
It's a cute little movie with Morgan Freeman and Jack Nicholson where they're kind of, you know, all of a sudden,
Oh, that's when they get cancer or something, right?
yeah, they
And
have terminal
yeah,
cancer, and then they gotta kind of like figure out what they want to do with their last days kind of thing. And you know, they start knocking off all these bucket list
yeah.
items. And you know, there's never a reason in Toronto, it seems like, for people to want to just kind of throw caution to the wind and live a little. It's everyone's always like so anxious about what's going to happen next.
It's just this city is infused with anxiety. It's
It's not healthy, man.
no, it's not healthy at all. I don't know how. It also was, I found strange is like I was actually curious about just general um, life expectancy, and I was like, the Dutch must have a really high life expectancy, and they didn't. And I was like, oh yeah, that's right, because they all smoke cigarettes still.
But you know what? If you live in a good life, I mean,
Do you
would you
need
rather?
90, or are you good with 75, but like nice?
Yeah, yeah. I'll take 75 with a really chill, nice life than 90 and anxious all the time, the whole way through.
Yeah, I must agree.
You know what I
I'll
mean?
take that too.
That's like
I'll
the
take
whole
my
kind of
odds.
vampire complex where they live forever but they're miserable. You
Yeah,
know what I mean?
I'll take my odds with that.
Yeah, you know, I don't need to be Brian Johnson and like live forever if I'm going to be miserable the whole time,
Yeah,
you know? But speaking of anxiety,
yeah.
it seems like people are getting a little bit of relief now with
Are we
yesterday's
on camera, by the way?
yeah, oh yeah, we've been filming this whole
Are
time.
we doing all this? Are we releasing all of this right now?
Yeah, why? Well, most of it. Why?
I wasn't sure if I said anything wrong or right in the last couple of minutes, but it's okay.
Nah, man, you're totally fine. It's all good.
All right, let's get into it.
Let's get into it. People have a little bit less anxiety, I feel, maybe, kinda. Obviously, a quarter point reduction in the overnight rate is not going to buy anybody a cup of coffee, but
Cup of coffee, maybe. Not much else.
right. And so, from the mortgage perspective, obviously, people are still really shying away from variable rates anyway. So, obviously, this is mostly just an impact on consumer confidence, is it not? In your opinion, you tell me what you think.
It's a teaser. It's a teaser. It's a trailer. It's a trailer for what's to come. And this trailer features no explosions. It's a very vanilla, expected behavior that was sort of what everybody predicted for the past few weeks. Now, again, predictions are very broad in most cases, right? Like everybody was saying, they might keep the rates the same, they might cut the rates a little. Nobody said how much, or people were speculating a little bit here and there, but nobody was expecting more than a quarter point decrease anyways. The important thing is like understanding the dynamic as to what the Bank of Canada is trying to communicate to the consumer. So what the Bank of Canada is trying to communicate to the consumer is something along the lines of, hey, I know this hurts and I know you're suffering, but just hold on a little longer. Look, we're all lowering rates. Just hold on a little longer, right? Because the big panic, and one of the things that has been sort of surfacing around the internet and social media networks, is the kind of this time being so critical because of how many mortgages are coming due for renewal, right? So what year is it? It's 2024. Years 2024, there's a big boom in terms of purchasing that happened after COVID. How many months away are we from that boom maturing? Most of those people are taking 5-year terms, right? So we're now starting to approach the final finish line before that boom is about to come due for renewals.
But we're not there yet.
Not there yet, no. And this is why this is a trailer, this is a teaser, what's to come. So the goal, I think, ultimately is to make sure that by the time most of these mortgages come due for maturity, the pain will be manageable, right? And this rate cut from yesterday communicates that quite well. It says, hey, watch, we're starting to decrease rates. We're not saying we're going to do this every rate announcement, but you can see where the trend is going. And for that reason, just hold on. You know, not that they're saying don't sell. They're just saying, hold on, there is a light at the end of this tunnel, whatever that means to you. Whether that means not selling and holding on for the property that you have right now because you are struggling with the payments will get better, right? Whether you have a portfolio of real estate, whether it be commercial or residential, and you're suffering, and hey, things are going to get better. And essentially any other demographic that's affected by the rate cut, saying, hey, it's okay, just hold on a little longer, it is going to get better.
You know, this is where I start to kind of weld the tinfoil hat straight onto my head, because I become so skeptical. And the deeper you look into these things, and I know that you have, this is why I want to talk to you about this, the more you realize how politicized all of this is and how much bullshit is actually involved in all of this. And when I really think about it, I sometimes think to myself, I don't know if you ever thought this to yourself, but do you ever think to yourself, the way that we look back on past generations and think and say like, wow, I can't believe they did that, is the way that they're going to look back on us with this system and go, wow, I can't believe, how did you guys even survive the way that you did that, right? Where, you know, we look back on the generation before us and go, gosh, you guys were like hopping onto an airplane and like lighting up a smoke in the cabin, right? And like that, it doesn't take a huge amount of thought to understand that that's probably not a great idea. But like, hey, it was just, no one really gave it a second thought. And for us, that we're living in this system where before there was no decentralized media, so no one really questioned it, right? And now you have podcasts and you have people talking in long form content, right? And you have a ton more kind of information to really chew on every day. To think, wow, they're going to look back on us and go, you guys really lived where in a world where every 6 weeks or so, everyone was sitting by their computer or television and waiting to hear what interest rates were going to be. The very cost of capital, which is like the most important price in the entire economy, just waiting for some unelected bureaucrat to tell you what that was going to be because of a central planning authority, right? That just kind of said, well, we kind of feel based on this data and that data, which is all highly politicized, and when you really look into it, it doesn't really make much sense at all. What like how painful economically it was going to be, and how much distress you were going to be in feeding your family for the next few months, right? It just seems so crazy to me. And when you look at inflation, and you look at how that's calculated, inflation itself is the measure of price volatility, not of prices themselves, of price volatility.
That's right.
But then when you hear what they count as inflation, it's just a arbitrary basket of goods.
Mm-hmm.
And if there's something that's too volatile, when they're trying to measure volatility, if there's something that's too volatile, they remove it, right?
Yeah.
They remove food and energy, right? Two things that are literally core to our very survival and existence, right? When we're talking about the price of energy or price volatility of energy, the price of energy is literally the price of everything, right? And
who are the richest countries in the world? Are the ones who produce the most energy.
right. And so we're going to remove that and then say, well, core CPI has come down. Do we really know that? Right? We don't really know. We don't even know how to measure that, right? And so
Well, not only do we not know how to measure that, we don't know what to do with it. Like we measure it and then we go, well, so should we do something or should we just leave it? And there is no good or right answer because there is no modeling that is being done that is like super accurate because there is so little information that we have at hand because we've only been measuring it for so long, right? It's like, so hopefully as we see all these different AI models become more intelligent and usable, right? Maybe at some point these decisions could be made better.
well,
But for right now, we're dealing with human error.
and you know what? I hope that we do, even though it scares the crap out of me. And I will say, I was using just today actually, right before you came, I was playing around with GPT 4.0, not GPT 4.0, the new one, with the voice, just like talking to it. And man, did it scare the crap out of me. And as much as I'm fearful of putting such control over our well-being into something like that, I find it actually a touch more comforting, even though it's not comforting. I find it a touch more comforting than trusting these unelected government bureaucratic central planning committees that just kind of, when they want to be, hawkish, they pick one number, and then when they don't, they pick another number out of the air, and okay, well, this number's not measuring what we want right now.
I think it's partially because we as humans like to romanticize about decisions being right or wrong and how greatly they affect the community. And like I think I may have brought this up a little while back in a different episode of the same podcast. So in the book called Thinking Fast and Slow by Danny Kahneman, he is working with a lot of statistics when he was writing this book. In fact, he was, I think, originally a psych major, and then he went on to work for various different governments and organizations. It's something very interesting that he mentioned in that book. It was this whole chapter on this, where they were trying to figure out whether investment professionals, investment bankers, whether there was such a thing as a good one. Because the argument, the thesis that he had, or the hypothesis he had, was that there is no way to predict the market well enough to be able to time it. So he was saying that investing is a very, very difficult thing to do well as a human. And when they started to compare just like the S&P 500 and its performance to every portfolio manager who was like a high up portfolio manager for all these different investment firms, none of them did as well as the S&P 500. Over like 20-30 year periods, they had some runs which were accidentally great for that time, or anecdotally great for that time. But when they found this out and they showed it to the investment bankers, I mean, they looked at it, they considered it, and then they shelved it, and they never looked at it again. So it was like you could have drawn from this simple exercise that maybe it's actually not a bad idea to allocate majority of your funds in something like S&P 500 versus letting somebody choose and select stocks based on their personal feeling because a lot of it is a personal feeling. How much information can you possibly grasp? Like, is it just the headlines that you're reading that you're going to be investing into these projects based on? And if you think about it, like, well, if we had an AI that was doing that for you, which probably somebody at this point already designed and is using it, I'm sure of it. Like we're living in a day and age, things are developing so quickly. We're only finding out about them now, but they've already been around for so long, right? So it's like, yeah, we are probably not as great investors, really, and we're not really good at predicting anything. We can't even predict weather.
Right. So how much better would we be at predicting at being able to understand what interest rates should be? Shouldn't that be predicted?
Interest rates is, yeah, we can't predict it. We're just like we sort of playing Russian roulette every time.
And we don't know what it should be, right? We have no idea. They have no idea. They have no clue.
According to economic theory, they're supposed to be between 3 to 4%, or like around 4% or whatever. So
Around 4% of what?
interest rates supposed to be around 3 to 4%.
Right. But based on what? You know what I mean?
Based on inflation being 1 or 2.
Right,
So
which is
like
not.
a marginal benefit.
Right, which is not. It's not 2.7%. Right?
I understand what you're saying. It's higher.
Yes.
It's higher.
Of course it
The
is.
real inflation is higher. Yeah.
Yes, of course it is. And when you listen to guys like Tiff McClellan, and I watch them every time. I always watch because I like to hear. I mean, I'm a curious cat, right? And I like to know what they're saying. And I got to tell you, it doesn't make a whole lot of sense. And
You just realized this?
and I've been realizing it for a while, but I think that like when you really listen to their economic models and you know, you might as well just freehand a graph curve of some kind and then name it something and then call it that and then make that your reasoning as to why you're doing something. That's basically what they do. Remember when they were coming up with the whole idea of the Phillips curve as their economic model for why they want to print money?
Remember the time they accidentally told us that our GDP was at 1%, but it was at 0.1% in December 2023?
Right. Right? And
Who was watching this? Like, who didn't check how many layers does it take to figure out what garbage GDP the country's? Anyways, I just think it's funny.
decimal point over here,
It's
moves
just like
over there.
sometimes it honestly feels like an episode of like Schitt's Creek. It's like, who put Daniel Levy in charge of the government? Like, why is this so funny?
Right. And it's all just to benefit, or you know what? It's really just like how much can we rationalize to everybody
Yeah.
the amount of money printing that we're doing to
Oh, yeah.
fill the bureaucrats' coffers on all of these so-called government programs that become so diluted and bloated. The bloat in government. And all of that comes to a head at the consumer level when you have everyday regular people feeling like they have no participation in it and they're just watching a movie passively and it's a horror movie and there's nothing they can do and they're strapped to the seat and they with their eyes like a clockwork orange like strapped open on their face, right? Like that's kind of what it feels like, and it's really unfair. And so I look at these interest rate announcements and I'm talking to clients, I'm talking to consumers who are honest to goodness just families who want to upsize, get some more space. Kids are just running around, you know, like it's just simple life issues that are impacted so heavily by these decisions, and no one questions it. No one even talks about it in Canada, and if you do, you're vilified. It's just wild to me. And so yeah, this interest rate announcement, it's like the most unexciting thing ever. And and I was really kind of curious to think, do you think this will actually move consumer confidence when there's so much distrust in the Bank of Canada now?
It will.
That's so sad. That's so sad, man. Tell me why.
Humans are simple. Nobody has time to like look under the hood and try to figure out the sort of the real impact of how these things affect you. They call people like me or you, right?
Right.
They call us and they say, "Hey, I just heard this happen. Is that good?"
Right.
And you're like, yeah. And they go, okay. I like anything else? You're like, no, no, that's it.
And we're the nerds that did look under the hood and then and then quickly closed the hood because we were shocked and horrified at what we
There's no
saw.
oil in the engine. Where's the oil?
And it's like, they took the economy to the brink
Yeah.
where we've been in a, GDP per capita
Just
recession
crushed.
for months,
Crushed.
for a long time, and people are suffering, and the tubes, the toothpaste is all out of the tube, and then they go, oh shit, and they try to stuff it back in, and they just can't. And so then they lower interest rates, and then they say some stupid messaging like they did, where they go, well, expect if things continue like this, expect more interest rates. It's reasonable to expect that. I mean, and we're just supposed to react based on this Fed speak. You know what I mean? This chatter that's coming from these bureaucrats about how they're going to influence the system manually. Like I mean, your family comes from the Soviet Union, right? It's like the pricing czar. You know what I mean? They're never going to get it right. It's impossible. It's too big a system, right?
Yeah, it's just, what do you do if you don't do that, right?
Well, we've never had an alternative unless you're talking about like a gold standard or something, right?
Some countries are working towards that, perhaps. Just not Canada.
What are you seeing in terms of? I know that there's big changes coming to the banking system.
In what way?
I have been reading about, again, because I'm a nerd, about things like open banking, stuff like that.
Yeah, that's like really hard to grasp right now. Like, what is actually going to do? It's going to be, we are entering, like, Canada is one of the countries that will participate in every Big Brother initiative there will be. Just because of the way that Canada is. Like, we are more likely to allow for it. We are more likely to allow the banking system and the government and the church to freaking merge than like any other country in the world. The States won't allow for it as quickly. Like, actually, I don't know about open banking in the States. I don't know enough about this.
They've been really big pushback against that, but here,
That's what I expect. Yeah.
Yeah.
It just makes sense. Like, we're talking about the only liberal democracy in the world for the most part.
Right.
That will fight things like that. But no, Canada is folding in for it. We're gonna have these 15-minute cities and all these open banking initiatives and all this stuff that comes with the Big Brother, as I call it, the big brother net of initiatives.
And it's really sketchy stuff. And are you seeing in the mortgage industry? Are they talking about it yet, or is it still kind of?
The mortgage industry is getting overregulated every year. Like, this year, we all are supposed to get onboarded with FinTrack, which kind of makes sense. I guess it's one of those things that's just long coming. But they're overregulating us like a lot.
In what way?
Paperwork. Like, everything is triple the amount of paperwork. I remember when I started in 2011 or 2012, it was like 3 pieces of paper to sign a person up, like some disclosures here and there, and then that was it. Now there is like a waiver and disclosure for every damn thing, right? And every bank has all these additional provisions and disclosures and waivers, and it's just very, very complicated. Even just reporting has gotten so complicated that I almost feel like a statistician sometimes, where I have to report things to FISRA so precise down to decimal points in terms of percentages of how much of the business we have from this side of things or versus this side of things. So it's like all these industries, right? And this is the nature of how developed countries are. Like, we reach a certain point where things are at a sort of an equilibrium, and this comes to almost every industry in developed countries like Canada. And then there comes a period where now there is room for stupidity. And now there is room to do things that are not necessary, because now we're just trying to tighten it up to make sure that it's just the best it can be. But often the perfect equilibrium is long past, and now you're just over regulating something that already works. In some ways, it's probably good they're overregulating. They're regulating the private lending industry more now than they ever have. They're trying to look for people taking advantage of consumers that don't deserve it. I mean, not that any consumer deserves to be taken advantage of, but especially like we're talking about lending in a very high interest rate realm, like somebody, should I even say that on camera? Well, it wasn't on the news. Harold the mortgage closer, right? You guys remember Oliver the jewelry buyer?
Was that
I
the?
buy your gold.
Oh yeah, yeah, yeah.
And
The
there was a
gold guy.
guy called Harold the mortgage closer who was like, I close mortgages.
Was he the like kind of like CBC marketplace kind of like, you
It's
know?
the same thing as Oliver the jewelry buyer. He was all over those CP24 channels.
Right.
I have cash for your gold. Same thing. I have cash for your mortgages. The guy was like everywhere. And the thing is like it was good marketing. Actually, I thought it was kind of brilliant because he was willing to get a little silly to get some business.
Right.
But
And
in
he
his case, what he got caught with was he was allowing for transactions to exceed the maximum allowed interest rate, which in Ontario, like I think this actually federally, we can't charge more than 60%. 60% is the most you can charge on the APR basis or the annual percentage rate basis, right? So when you do a mortgage transaction, there's the interest rate, but there's also fees and costs like legal fees, etc., etc. So if you do a loan that's even 20, 30,000 is small, right? But it's very high loan to value. Often the kind of lenders you need to work with are the ones that are willing to lose the money almost because like you may not get it back. So the fees are quite expensive on those.
mm,
So it's coming now to the point where the consumers are getting smarter. They know about these limitations or they research them or the lawyers are assisting them, but they're actually now starting to enforce them. So I think he was going through some levels of investigation, shall we say, that it landed on the news because the interest rate, not the interest rate, the annual percentage rate, the APR on the loans that he was doing were exceeding the the maximum allowed APR
so
on the
you
loan.
so you get scammers. It's nice to
Yeah,
make sure.
you get better regulation for the sake of preventing this type of behavior, and then you have silly regulation that just has to do with like more paperwork.
And when people hear this, it's kind of hard to kind of swallow because really the only news that sells is the rage click
Hmm.
that, someone scammed out. But really, how many out of 10 mortgages or 100 mortgages is a fraudulent mortgage, right?
I would hope not a lot.
I don't think it's a lot. I think in certain
They're
areas
out
it's for
there.
sure
Yeah,
worse.
they're
Like
out there.
like in Brampton it was notoriously
Wow.
bad.
Yeah.
But in other areas, I mean, it's been.
It's not even area specific. It's more just like broker or like whatever the
Well, that's what I
specialist
mean.
specific.
Like
Yeah.
they had
You
a
have
couple
like
of
one rotten
brokers.
apple. You have one person who is doing all that fraudulent business, and then everybody started going to them, and they become the source of it all, right?
Right. It's
Um,
a Pareto distribution of bad
and
actors.
then all of a sudden, yeah, exactly. And all of a sudden, then you just see them disappear.
Right.
They go to jail or whatever the hell happens with them, right?
Right.
From the other side of things, from like the regulatory perspective, in terms of programs and the things that the regulators are doing in Canada specifically to regulate and to promote healthy lending behavior with the banks and to encourage consumers to borrow and to do things. Um, they are doing some things that are nice. They're doing some things that are not very nice. Like the loan to income ratio is one thing that is being rolled out, where now banks have certain buckets of exceptions. They're allowed to make certain amount of exceptions for magnitude of reasons. But an exception is when the file has something slightly off about it, right? If let's say you have maybe the debt servicing ratio is a little high, but it's a little bit lower loan to value, so the loan is quite low compared to the value of the home, so perhaps that warrants an exception. That's nice. Up until this past year, 2023, banks could do that at their discretion. So if it made sense, I mean, they just did it to a degree, right? Because ultimately they're still regulated. Um, so what's happening now is the Office of Superintendent of Financial Institutions that governs these banks said that, okay, well, you can do that, but only so much percentage of your portfolio can have exceptions. So you can do it. I'm not saying you cannot do it, but just remember, you can only do it so many times in a year. All right. What an interesting change in dynamic. It's like, okay, 1 minute. So we can do this on every file we get. So we gotta like cherry pick. And in a way, what that's supposed to do, it's supposed to level out the playing field so that other lenders have a shot at these files as well, right? So it's not just going to the same 1, 2, 3, 4 lenders, but that if these ones can't do it, go to a different bank. These exhausted their exceptions. Let's try BMO. Let's try Scotia. Let's try Tangerine. Let's try this, right? Maybe they can get it done. So like in a way, something like this as a regulatory change is both good and bad. Bad because it's going to limit what these banks can do for the consumers. Consumer suffers, so do banks. Other banks have a chance, which means that it promotes healthy competition. And healthy competition long-term promotes healthier lending environment. So like both good and bad, right? Then there's other things that they are doing, like they're allowing now, we have a few banks that are doing 35-year amortization. That's a pretty big deal. Last like couple of years ago was 40, but then things took a turn with the interest rates, so they scaled it back. So the nature of the regulatory framework for lending is that it's not in stone. There are some fundamental things that we use that have proven to work over the course of the last 5 or 6 decades or whatever. And that's like the general debt servicing ratios, the benchmarks we use. And then there is these things that are to adjust to as sort of the market changes, as the economy changes, as the cost of borrowing changes. And that's where new programs emerge. And they pave the way to things that we never had before. In this example, let's say 35 or 40-year amortization. And so that's why, as much as it is painful in this environment to often finance something, it's not impossible. It's just that it comes with, unfortunately, with a bit of a higher cost now because the interest rates are so high, right? So even though the interest rates are so high, I always tell people, don't just think that because the interest rates are high, you can't do stuff. You can still do stuff. There is always going to be ways that the banks are going to try to make sure they make money. Because like they don't make a lot of money off of your $11 bank fee that they charge you. Although I'm sure on a million people basis is quite a bit of money. It's just not all that they need. They need more. And to do that, they need to be innovative with their products. So the products in 2024 are very innovative. There's various different products I've never had before, and which is why deals are closing. Painfully sometimes, but they are.
And so I guess really what it boils down to is getting more creative on the consumer side.
Well, getting more creative with developing programs that work within the regulatory framework, but exhaust every corner of it to make sure that the product that's available to the consumer is the most they can possibly use or get. So they have the option of exhausting the option, whatever is available within the box.
Right.
It's just the box moves.
Right? And you know what? The box moving is fine, right? Those rules on what the free market can do, obviously there's always going to be a balancing act happening there, and that's fine. It's just the interest rate itself is where things become so difficult because that's the biggest box mover of them all, right? And it's just weird when we're in these situations and we kind of like go like sitting here and going, remember when they did this? How stupid that was, and right? And then thinking to ourselves like, oh God, that was a year ago. What happens next year, right? What happens when all of the tons of immigration that we've taken in puts so much demand on the housing market, and then they have to lower interest rates.
Stay. No, I have another opinion on the immigration situation.
Tell me.
If you look into like into how the actual new new Canadian residents are talking about their experience in Canada, it is not pretty. So a lot of these people are coming expecting to get an education, apply for a good job, get their status, get their PR status here in Canada, eventually maybe stay here and build a life for themselves. But once they realize the cost of living in Canada, they often just can't comprehend how it's supposed to make any sense. Because you see, the thing is, I remember when I came to Canada in 2007, this is when I came here, I was 17 years old. In 2007, if you made $100,000 in Canada, in Toronto,
That was a lot of money.
you could buy a 3-bedroom house quite easily, like no problem at all. In fact, you had enough room in your income capacity to buy maybe a 5-bedroom house for like here with that same $100,000. You had enough money to pay for whatever food, education, car payments, whatever. It was just enough. Like it was just it handled things well. Um, and then like you fast forward to 2024, and when you look at an income of 100,000, that's just enough for a household to survive. That's what it takes. Like a household that, and I'm talking 2 people in a lot of cases, will pull in 100,000 in income, and that will be enough to survive. Because anything short of that, you are getting in debt. Because remember, like even if you're making 100, a lot of this taxes, and when you just look at the net income, and your mortgage is like 2, 3 grand, you don't have a lot of disposable income.
No.
You
And
get
then
like
you go to the grocery store and it's done.
out, right?
Yeah.
And it's like, well, like when I was looking at it in 2007, I remember going to school, I remember working, I remember saving, and like I had plans. Like things made sense. It was hard. Like don't get me wrong, immigration is always hard, and like you know, you do all kinds of jobs and you survive, right? But there was like a light at the end of the tunnel. It made sense why I was doing it. You throw me into Canada, right? If I was 17 right now, and you throw me into Canada right now in 2024, and you were like, hey, let's go, let's make it happen, I'd be like, I don't even know how I'm supposed to catch up to this. This is just like insanity. Because when it comes down to, let's say, going out there looking for jobs, right? That same $100,000 is not going to get you much. Like you're going to get maybe a 1-bedroom condo, even in the current, you know, deflated market conditions. And that's it. And like, you know, if it's a household of 2 and that's your income, you really start wondering, is this the place? And you start thinking, maybe I should go somewhere else. So we're losing a lot of people. There's quite a bit of Canadians leaving Canada. They're moving to places like the States, or some they're moving other places. Like it just depends where their heart is at, right? I'm part of a community that's a Brazilian Jiu-Jitsu community. I had a few friends who moved to Dubai. I had a few friends who moved to the States because they had better opportunities. And to them, those choices made sense because in their opinion, they came to Canada at a point where, although there was opportunity, the price you had to pay to live a quality of life they were looking for, it would take all their time away from them, and they would make them essentially work just for the shelter that they live in. Whereas if they were living somewhere else, the same efforts would be giving them a lifestyle that is more comfortable,
Yeah, like
rewarding.
we kind of like normalized being house poor here.
We've normalized a lot of things in Canada just by comparison. So um, let's just say I know somebody who lives in Germany. Okay. Let's just say that I may know how much rent Germans pay for their flats, right? Some of them pay let's say 500 euros. Some of them pay 1,000 euros. But a 500 euros, 500 to like 700 euros in Germany gets you like a 1-bedroom unit, like maybe closer to the 500, probably like more like a studio, but it's gonna be like 500 square feet. You know, if I remember correctly, that also includes almost all utilities, just like maybe internet is extra. And like internet is not expensive, right? And because like it's a service, it's a like country's large population. So services like telecommunications don't cost as much as Canada. We only have 30 million people. I mean, like we have a gigantic country. It's so hard to cover it all. Now, I'm not making excuses for Bell and Rogers. They're still not great.
Not great. Dude, don't get me started,
Trying to be
please.
politically correct here. Okay, let's carry on.
What you want to talk about like scams, telecommunications in Canada? Okay, don't let's
Let's not
not.
go
Let's
there.
not. Let's
Let's
not.
not go
Let's
there.
not.
What I'm trying to say is like Yeah, I can imagine how living in places like Germany, who are going through a horrendous inflationary period right now with the price of everything going through the roof. Like there, yeah, you could make, I don't know, 50,000, 60,000 euros and like live a comfortable lifestyle and not work on weekends and like go see your family and have kids and be able to finish work by 5 and have food on your table. Here, like when I was traveling recently through Europe and I told people what we pay for rent here in Toronto, what we pay for real estate, they couldn't believe it. The immediate answer was like, if I had to pay that much for rent, like I'd just be broke. I wouldn't have enough money for anything else. I would just have no money left. And it's funny how normalized these price tags are in Canada and how Toronto is just so incredibly overpriced.
But that's inflation. That's the basement of our dollar, right? That's when it's not that we've run out of food and so we've run out of supply of food and that's why the prices have gone up. No, it's the debasement of our currency.
Well, this also raises the question as to how is it that, let's say, in countries like Germany, there is affordable rent? Well, countries like Germany went through periods of rebuilding. When the Second World War was over, Europe was in shackles, and the next 30 years were spent building enormous amount of just cheap, affordable housing, like just general apartment buildings that are at some point were obviously government run, right, and eventually were privatized or sold to companies and then managed. But when that transaction happens between a government and a management company, the property often already has tenants, and there's a certain level of expectation as to what the cost of living should be, right? And it sets like a marker, and it makes things, it standardizes them. It's just that Canada never really had that when we didn't have a war, and thank God we didn't have any wars in Canada, right? We didn't have to build enormous amount of housing and get good at it overnight and lift a bunch of regulatory roadblocks just so we can achieve a level of equilibrium within the community that lives with this beautiful country. And so what we were left with is we were left with a very with this acute um, form of capitalist socialism, where we sort of control a lot of things, right, for the past 50 to 60 years. And some we did like pretty good, we did okay, but some we didn't do a good job with. And housing is just one of them. And it's just now at a point where in order for us to catch up, we need a kind of initiative like Germany had post Second World War. It's an emergency. It's not just a problem. When the country went through the Second World War like Germany did and they needed housing, they just built it. I mean, it was obviously a matter of recovering from the ruins of the Second World War, but they just did it because they needed housing for all the people. Why can't we do that? Well, we have all this regulatory roadblock in our way. And I'm just gonna say this is just anecdotal. I went to see Mad Max yesterday, the Furiosa, the latest Mad Max movie, and there was a moment in the movie where this guy, I think his name is Dementius, who is like the villain of the movie. He is riding through these deserts and he's laying siege to all these citadels and all these little towns, telling them to submit, right? And there's a point where he walks out. There's like a big horde of people behind him, and they're sort of laying siege to the citadel. And it was such an interesting moment because when he walks out and before he is laying the terms of the siege or how he's going to take over this town or whatever, he asks that he calls, I can't remember how he addresses them, but he calls these, my wonderful people. I don't want any bloodshed. I want to avoid it, but I want you to bring me the people that keep you in chains, because if you ever was afraid, right, this is your time to rise up. And it's an interesting concept because, like, we live in a Western country, and we don't have the mentality to rise up against our government or to speak up against our government. We're very pacified in that sense, and that kept us safe in a lot of ways. And it has a lot of good things about it because it kept the country stable. It kept the country solid for all those years, right? But it also promotes complacency. And like in every situation, there is typically a climax. It just, hopefully we have reached the climax and we're going to be able to look back on what we've done in the last 10, 15 years and say, okay, well, this was wrong and we can do better in these different areas and ways. But it will take a lot of it would take a Herculean effort to do what what the Liberal government is promising with building, God knows, I can't remember how many even houses they were saying per year.
Well, haven't they been saying that for almost a decade that they've been?
Yeah, yeah, it's a theme. It's been a theme for some time, but it's also like we will never rise up against it, right? Like even if it takes 30 years to build that inventory, and the government completely falls through on all their promises for the next 2 election periods.
Just feels like people don't have the time to even focus on these things, right?
And that's what it is, right? So, and that comes back to that earlier comment. So, in European countries, there is often demonstrations. There are often demonstrations. They go out of their way to attend these demonstrations. People take time off work to do it, right? We don't, because we're too busy paying rent. The rent is so freaking expensive.
Right, we're distracted.
They're so busy paying rent that Brave New World that Huxley was describing in his book is inverted in Canada. We don't need SOMA to feel happy. We just need to be busy.
Right. It's like we're distracted and docile.
Yeah.
Right? And that's perfect for any government, right?
Ideal.
It's ideal, right? And so when I'm kind of, I guess, like, you know, I am very fortunate. I don't want to sound ungrateful for that, and this country's given me and my family so much, but frankly it's not the same country that I grew up in. When I go downtown Toronto now compared to 15 years ago, it's unrecognizable, right, in a lot of ways. And so when I'm fortunate enough to be in a position where my career is to nerd out on these things, so that, like you said, when someone says, I got kids to feed, I got my own job to worry about, you just tell me, hey, is this a good thing or bad thing? And I've looked, and I've nerded out and I've looked under the hood and gone, yeah, right? That it kind of scares me a bit too, because I'm fortunate enough to be in a position to look under that and see, you know, in 2020 when the pandemic hit and there's chaos and hysteria and, you know, just panic. And you listen to these bureaucrats give their reasonings for why they're going to do things that have led to the situation that you've just described. Excuse me. And you hear things like, oh, well, because of our model, and we're calling it, for example, the Phillips curve, right? Remember that one? And basically that allows us to do quantitative easing and print all this money without calling it money printing. And our M2 supply is just going to skyrocket and continuing to do so right now, even, by the way, right? Well, I don't need to tell you, you know that. But, and then to hear them in 2022 turn around and go, well, you know, the Phillips curve was wrong, apparently. Like, we were just wrong. And for them to say that kind of just in passing and, you know, no big deal kind of thing, and then on to the next. And you just know that these people can't, it's not that they're so incompetent that there would be someone better that could do it better. There can't be someone better that could do it better. We're only human. We don't have the capacity to compute what it is that's actually going on in an economy. It's a system that's far too large for us to possibly comprehend. And so you kind of know that we're just stumbling our way through this. There's going to be no good solution. And now, like you said, we're in a housing crisis and have been for years.
Yeah.
And we need to have some heroic effort pulling together to get it done. And obviously, the government has not been able to do so and has just brutally failed in every attempt. and to turn to those same people and expect different results seems ridiculous. And so what do you think it is?
You need better systems. Like if you had to describe what the government is dealing with when it's fiddling with interest rates or the fiscal policy or whatever, monetary policy, any policy, it's trying to be Marty McFly, and it's trying to fly back into the future and change one thing. Just hopefully the rest of it works out, but it just can't get it right.
Right, it's the butterfly effect.
It's just every time it changes something a little bit, it just like screws up a whole other dimension of things. Like, okay, well, we know how to fix this problem. We need more employment. Okay, immigration, turn up immigration. Okay, immigration, good. Oh, housing. Oh, no, turn to housing. Oh, no. Oh, and then it just all falls apart, right? So it's like that's just the nature of the beast. And so what I mean by need to have better systems is we need systems. We need like artificial intelligence we need to welcome it into places like the government so that these decisions can be made on the basis of a very sophisticated, calculated, intelligent model that does it on the basis of everything at the same time, not just what we emotionally feel is right? Like it might tell us that we have to it might tell us that we have to do something very radical. Maybe it'll tell us to close the Bank of Canada. Like, I don't know. It'll be like, close the Bank of Canada. And we don't understand the decision, but maybe like closing the Bank of Canada is the best thing we could have ever made.
And you know what? It's so interesting that you say that, because I have a client right now.
Yep. Call him Jamie.
Yeah. Jamie has a degree in physics from Queen's. He does risk assessment and risk management for an enormous financial firm. He's a super smart dude. And me and him were talking about this, talking about the Bank of Canada's, overnight rate and the cuts and how it's all just so ridiculous. And he said to me, it's really funny. There's a very interesting paper that some mathematicians had put out that basically argue the thesis, and he said it's a very good argument that we would most likely be better off using a random number generator within a certain scope, of course, right? Not unlimited, for the overnight rate, and just at random times to just produce a new number for what it was than what we're doing currently. And that way it would create enough uncertainty in the market for the speculators to be more conservative, and all kinds of other things would happen, basically to not have humans at the wheel. And that's kind of, I guess, what you're talking about. And he said that mathematically it was actually producing better results when they actually tested the models in theoretical.
It would be interesting to test that out, because you see that here's what we can't predict with that model. You can't predict how the humans behave. Like, you start doing that, and then they get so scared of the freaking draw every 2 months that they just stop spending completely.
Or they're monkeys and just beat the machines and smash them with bats.
Right, but like, what if we scared the living hell out of the consumer to the point where the consumer doesn't spend it anymore? Well, okay, so what does that do? Well, that drops the value of assets. So all of a sudden, everything loses value, and then all the retirement plans, all the other crap, everything goes under the...
It's impossible to speculate what it would bring.
Yeah.
Right? And
yeah.
I think like that's kind of I think the point is that like our Toronto market is so heavily speculated on.
Mm-hmm.
And I see it all the time. And you can see it in the headlines now. It's been one day since the Bank of Canada has cut the interest rate by a quarter point, which is bupkis, right? Yeah. And we're now seeing headlines all over the place that are predicting
200 basis points off by the end of the year. 400 basis points by the end of 2025. I'm like, what are you all smoking?
Right. And it's just like the only thing that sells is to just create FOMO.
Yeah.
Right. And I'm seeing this and I'm going, God, I have a podcast where we're going to talk about this and like kind of just like be realistic as much as we can be with our silly little human brains. And this will get like no views in comparison to like rage click FOMO bait that will, you
Yeah.
know, create anxiety in the foot tapping Toronto citizen that is looking desperately to get into the housing market so
Well,
that they're not choking.
it makes you wonder when you see things like this, when it seems like obviously the job of the news channels is to make sure you know about the latest news the as soon as they can possibly give it to you, right?
Is that their job, or is
Well,
it?
technically, it's supposed to be their job. Their job is to like give you the latest news as soon as they arrive, so that they're the first ones to give it to you, and then they beat every other news station. Like that's the mandate amongst the management of those places, right? It's like we got to be first, no matter what it is. We got to be 1st.
Mm-hmm.
So okay, so like, but then it's like then there's like another aspect to this, and then what's strange is that if you think about the way human brain works, if you make the headline controversial, you're actually more likely to get attention. Because if the headline is just vanilla, what everybody else is saying, it's just another headline that you go, okay, well, I already know this from other headlines. But if let's say Vice came out tomorrow and was like, Bank of Canada lowered 0.25% interest rates, which actually means nothing for you as a consumer, right? Like, imagine that. Why is that not happening? Why does media? Well, 1 minute. Why does media sometimes feel so coordinated? Well, because in some ways media is controlled by corporations, the government, and perhaps the private sector that holds the means of distribution of information in their hands. And that makes you wonder who makes the decision as to what is the main sentiment in the paper that day, and what is their real mandate, right? Because like if we're just looking for clicks and controversy and just real clickbait to get more people onto the website, I would do something like the Bank of Canada cut rate by 25%, which means doom for homeowners. And it's like, if I'm at home, I'm like going, this is making no sense. It's supposed to be good. Why is no one doing it?
And like, you know what? I guess I really empathize with that because I have my YouTube channel.
Yeah.
I do, beta test all of my, all of my titles, and I see what comes back.
Yeah.
And I'm guilty of it too. I'm guilty of it too. So I'm not gonna sit here and pretend to be a saint about it. But at the same time, you know what? Maybe with this one, I will make a title that's like kind of like,
Bank of Canada cuts rates. Oh my God, why would they ever do that?
you know what? It's so funny because it's funny that you mentioned that. In my last video on YouTube, I was saying like, I don't even know if it's that good of an idea maybe right now. You know what I mean? It's just like this whole thing seems like, I don't know. Anyways, I got comments on my YouTube of people furious at the concept of the Bank of Canada cutting rates. And I was like, you're furious if they don't cut. You're furious if they do cut. Are you a bot? Are you real? You know, what is this? Or is this just the way it is now, right? And so maybe for this one, I'll make a title that is just kind of like more true and honest. And if it doesn't get clicks, it doesn't get clicks. But I can tell you right now that this is the most real and honest conversation about this stuff that no one in my industry, I think, is truly ready to have, at least that most of them that I think, because everybody's so focused on the sales volume, right? That's the only thing that matters, right? When you're focusing on the transaction, that's your job. Your job is to facilitate the transaction and make it as smooth a process as possible, right? Put guardrails on for consumers.
Yeah.
And so yeah, sales volume does matter. And if interest rates go down, that's going to improve sales volume. And sales volume's been in the gutter for the last like couple of years.
We needed it. Like the market, as much as I was of the opinion they should have held the rates, they shouldn't have lowered. I think that this might do more bad than good.
Oh, for
in the
sure.
short term. Yeah.
100%. 100%.
So, that they did it. I mean, I don't love it. I don't hate it. I think it's fine. I think it's worth a test. Like, what do I know? Like, if I was sitting in the Bank Canada shoes, I'll probably give it a shot as well. Like, that there's so many pressures I'm receiving from every direction, from the real estate board, from the whatever, the consumers, from the, like, everybody, right? And it's like, well, when everybody tells you to do something and you don't, and then you're wrong, well, we know how that goes. You get booted out. When everybody tells you to do something and you do it and you're wrong, everybody goes, well, it's, well, you had to try.
It's like
So,
COVID. All of COVID was basically that.
pretty much. So it's like, in this case, it's this. They got a lot of pressure from every direction. They looked at each other like, I can do this, like, and we got it wrong this time. We're like screwed. And they're like, okay, let's drop it like 0.25%. And they did it.
In fact, actually, I watched the press conference, and it was one person actually asked, "Hey, are you going to continue dropping rates?" Right, one of the news outlets, and then he gives his same, vanilla answer, and to McClem, and then another reporter, the next news media outlet, asks the exact same question again, and he goes like this, and I found it so revealing when he goes, Tiff McClem goes, "Can't we just enjoy this moment for a second?" He actually said that. If you go back and you watch the press conference, that's actually what he says for a moment, and then you hear a couple of chuckles from some reporters.
That's funny.
Right?
Can we just enjoy this for a second?
Yeah, for real.
Good answer.
You know what I mean? And that's what we've come to. That's what we've come to now.
Yeah.
So I don't know. Look, I guess we will see. But as of right now, I don't think this makes a shit bit of a difference, in my opinion.
Not a lot.
And I think that people still need to be extremely cautious and conservative in how they're doing things.
What it will do is, here's what it will do psychologically. So whereas before, when people would call in and say, well, like, what's the best rate right now? I'd be like, well, I don't. Let's take a look, and we'll like look through the grids real quick. I'll be like, okay, like it's like about this much for conventional, this much for high ratio, and they would all go, yeah, it's really high, eh? You go, yeah, it's pretty high. And then like yesterday, the rates went down 0.25%, right? And it's the same conversation, just a different person. Obviously, there's maybe a different sentiment towards the market, but it's like, hey, what's the rate? And it's like, let me take a look. Can we take a look at the grids? And it comes back with, well, it's not bad. And you're like, yeah, not bad. It's worse.
It's been worse.
You're right. Right. So how funny of it, like, what a different sentiment towards the whole damn thing, and all it took was just here's a little bone, right? Like, here, enjoy it. Can we just all enjoy this right now? Yeah, this is what we should be enjoying right now. It's just we can't focus on it. So some consumers will focus on this as being the big relief, and they'll go out and they'll buy something, and that's fine. That's also okay. This is how business is. Even in a market like it is today, there are still deals. There are still properties that are beautiful that you couldn't get any other way, but because there is a bit of a downturn in the market. I'm not saying don't buy right now. I'm just saying be careful with what you're doing. If you're buying property you're going to be living in for the next 10 years, the time to buy that property was any time. There was never a bad time to buy that property. You're not moving. Yeah, sometimes it's a little bit cheaper and it's a little more expensive, right? Timing the interest rate, also, like, no point. Can you afford the payments the way they're coming to you right now? You can? Great. It will get better. It'll be a little cheaper. So I'd say that if this is enough of a motivation for you, if this is enough of a flag to say, hey, things are about to get a little better, we just don't know when, I don't think you're wrong. I think that doing something now is also fine, just as long as you're doing it with the right goal in mind, right? You're not just jumping saying, oh, if I don't do something now, I'll never get something. Well, no, you will get something. It's just a little bit different. And that's it. So it's actually like, yeah, it's nice. It's nice. They lowered the rates. It's good. in the interim, it will stimulate the market a little bit. Some people will wake up, which they already did, right? We already started getting calls yesterday and today, just inquiring about how that affects their qualifying parameters, for example. Improves it a little bit. Like how much? Not much. 10,000, whatever, $5,000 here and there. It's not big improvements, but it's improvements nonetheless. And that sometimes is enough to get people to move.
So you heard it here, folks. Stay safe. Be careful out there. Konstantin, where can people find you?
Follow me on Instagram. Probably the best place to look up my posts, my channel.
Shout out to your Instagram. It is fire. Really, really funny. You're entertaining on it.
I appreciate it. I try not to post irrelevant stuff. Like it's not a lifestyle. It's a little bit of a lifestyle channel. It is my personal account and business account. But my stories is where I try to share a lot of the information that has to do with what you should know about the market, right? So if you follow me on Instagram, just make sure you follow my stories more than anything else. I don't post a whole lot outside of the stories, and that I try to keep clean and easy to understand, so that when things like what happened yesterday happens, and people are like, well, why did they do that? And I was like, okay, well, let's list the number of reasons. And I think I listed like 6 or 7 different reasons, different things that are happening at the same time that I've been watching for the past few months. And I've been talking about them here and there. I think I brought this up last time I was here on the podcast. I brought it up sometime when I was posting earlier as well. And it's just like observations, right? So if you're curious to learn more about the observations from the mortgage broker's perspective, who is doing, you know, everything from your residential, institutional, commercial, private business, and you want to have kind of that perspective, right? Because you have a real estate perspective here with Adam, and you want to get a mortgage perspective, follow at The Pocket Broker. So just the way it sounds, The Pocket Broker. Thank you.
Thanks, guys. Don't forget to like this video if you want more of this content pushed out to more people like yourselves. Don't forget to click the subscribe button below. And if you're listening on Spotify or Apple Podcasts, just give us a great review so that we can keep growing. And thanks so much for coming in, buddy.
Thank you.